Good morning. It's Friday, February 26, 2016, looking at the ES March contract, and I want to do a trade review for yesterday, Thursday, February 25th, on a trade I took sometime around noon. I did some things right and I did some things wrong. It turned out to be a great trade, one for 6 points and one for 8 points. I started as a one lot, but added another. I'm counting the whole thing as one trade. I took them both off, I think, at the same. Yeah, I took them both off at the same level at the same time. Um, anyway, I did some things wrong. I did some things right. I want to talk about that. But starting firstly, I wanted to speak to why I went long when the market had initially already probed the upside in A period. Let me make this a little bigger here. Already probed the upside in A period, and then we created the initial balance all the way down into this upper distribution, which in the pre-market yesterday I talked about. I was splitting off the prior day, Wednesday, into separate distributions as separate days, and I was going to look at value according to that. Well, even though we got down here in B period, just below this distribution, and we couldn't close these single, well, yeah, close the single prints in L here. The value tended to be high, overlapping to higher. Okay. Now, there's one thing I did shortly after I'd stopped the video. Had an interruption. I didn't do my video early enough. Simon was doing his pre-market, and anyway, after that, I did share with people in the group, and also it was too late to go back and add it to the video. But I decided to pull in the prior 2 days. Okay. So I put in, I think it's Monday and Tuesday. Yeah, 22nd. Anyway, I merged them, okay? And what we've got there is this cavity here. And one of the thoughts was, because my overall bias or disposition, I'd rather say disposition, it said a bias is a horrible trading companion. And I agree with that. But basically what I was looking for as far as the odds were that we would be neutral to higher. And excuse me, I also said, I was going to play it by ear and kind of let the market shake out a bit, which I thankfully did. Although that cost me, because for a while now, a couple weeks, I've been trading very early, which is something I just really didn't like to do before. But I've gotten better and more confidence in things. So, but I really kind of like, well, I'm going to hang back because it is a little tricky area, it seems. And that kind of hurt me in the long run, because I didn't take my first trade until this trade I'm about to talk about. And I'd been on a Skype call for an hour, this and that. I was distracting myself, whatever. And the danger in that is I was not totally in tune. I wasn't paced with the market. That's probably the best way to describe it. I wasn't in sync. And therefore, when I saw something, and even though I didn't just click the button or something immediately, I thought about it. I talked about what I was going to do in the room, and I had to wait actually to get filled and all these things. I was still early, you know, um, and I was kind of way early because I took some heat, and I took more heat than I normally would like to. I kind of adjust on the fly, but and I'll talk about that in a minute. But that's allowed, and I'll get into that in a minute. So let me delete this here. Okay. Um, so I thought we were going to maybe fill in this area, because that very often happens. It backfills, and that's sort of what happened in here a bit, and it's what started to happen the prior days. So just kind of finish the business here a little bit. And you notice we started to have higher lows and everything, and we started to one time frame higher right in here. This is where, let me change this color from pink. I can't say I'm not a hot pink kind of guy for some things. I don't know what exactly, but I think all colors are great. But let me change the color, because this is, I didn't like that. All right, so starting from the D low, okay, we left good excess down here. We had a value overlapping to higher, okay, and we had higher lows in D, E, F, and not only higher lows, we had higher highs. Okay, now we're up here in F. I can't remember if we'd already ticked up of it once, or we had E and F matching here. I don't remember what was I'm sorry, it's been a day. Okay, so I don't remember exactly. But the bottom line is, this was my trading plan. You know, I was looking to get long at this point because now we're back up above yesterday's range. Okay, we still had not taken the overnight high, which was right up in here under this POC. We had this prominent POC up here that had been not repaired yet. All right, so let me erase these drawings. Excuse me. And I'll show you what I did. Now you can see we got that POC. We went to the moon, Alice. You know, look, we went all the way up here. Wow, beautiful. You know how wonderful it would have been to get long anywhere down in here. Let alone you could have gotten long maybe down here in G, down here in whatever. And okay, I'm missing a reference here. Should be prior week's high at 27.25. Don't know why that is. All right. I had a computer crash yesterday, and my software had to be restore point. I lost some things. All right, so I just noticed that. Okay, so I'm going to move this back to the 5-minute chart here. Well, it's not a 5-minute chart per se. I mean, exactly, it's a 5-minute chart per se, because I can change it to any time period I want, and I do a lot. So I got 1 minute, 5 minute, 10 minute, 15 minute, 30 minute, 60 minute, 240 minute, daily, weekly, monthly, and I flip back and forth, and you know. Call it my Google Earth view or whatever. You know, I look at it a different way. You know, sometimes it's like I'm trying to divine what's going on if I don't know exactly. So anyway, so you know, in the morning, these are 5-minute bars currently, right? So we came down and came up, and you know, wondered if it was going to be the downside, because one of my thoughts were that we might have a slow grind down, you know, just back through this horrible structure. If you saw my video yesterday, and a handful of people seem to have, because there's some counts on it. Don't know who they are, where they come from, or what they think about it. But regardless, it started to do that. My plan was to let the market shake out and just waiting for that to happen. Well, it didn't happen. You know, we sort of gapped. I mean, it was one tick, right? But we gapped and we didn't get valued unchanged, and that bodes for a later rally, and that's what happened. But it wasn't sure. So we initially, you know, there's a lot of game playing in the market, and this was, maybe it was a fake out. Probably, I think probably not actually. I think it was probably just the way it went. I'm gonna draw I need to draw a fib retracement here, and I didn't do this at the time because again I was just letting it go. I'm gonna see what this rally high is. All right, it went above 61.8. Okay, and I'll explain what that means in a second. But okay, so we came back up, and then we had this move up and then a pullback. Okay, and then we had another move up and a pullback. Now, initially I was going for this move up to be a 1-2 move. Let me draw that on here again. I lost my Fibonacci button. It just stopped working for some reason. Well, for some reason, I think I did something to it, and I couldn't figure out what I'd done. Wait, maybe I don't need that. That line was already on there. Was it? No. Okay, this one was on there. Okay, yeah. So what I wanted to do here, let me do this. I can make my Fibonacci button. Probably should stop the video, but I just want to keep trucking for now. Okay. All right. So very often the first wave or the second wave pullback is 61.8. So this went overshot it a little bit. As a matter of fact, it went, I think, exactly to 78.6. Yeah, check it out. So it went to 78.6, and that's allowed, you know. So the main thing is that it doesn't retrace 100% or more, or over 100%. So these are Elliott wave rules for the those who don't know. Okay, so you know, I was operating off of that, and there's a technique where you go from the origin of wave 1 to the terminus of wave 2 and draw a parallel line, and I was using that channel. Okay, and that channel helps me to know if this is an impulse wave or a corrective wave. If it stays within the channel or a very little throw over, throw under, it's typically an corrective wave. And anyway, we went up, and I had a line, and if I draw a line here, you'll see it was a little bit lower. Okay, it was, well, it was down here a little bit, and I think I had my bars kind of stretched out, so it looked a lot further away than it really was if you look at it like this. See? Okay, now I'm going to take this back off. So that's what I was looking at, though, to start with. All right, and I got long. What I did was, when we had broken through these moving averages, okay, we got a hull 20. This is special line. Don't worry about the purple line for now. But it went through here. Was coming back, okay, and I was going to get long at 30.75. Now, why I did not want to wait till it hit the moving average was because I was operating under, this was a second wave, and this was a third wave move. I didn't have any confirmation as a third wave move, but I got ahead of myself, and I was thinking, a third wave move is typically going to be a 5-wave move within itself on a fractal. So it's going to be 1, 2, 3, 4, 5. I didn't know how far to go, but I thought it looked like it was going to come out here, and so I was going off of this line a little bit. It's in my mind, well, but I was also, okay, I kind of started with this chart, and well, that's not true. I started with this chart, but I wanted to get back to what I was thinking on the market profile, is what I was looking at as far as an entry. So I don't remember exactly what price it was right here. I believe the auction was now the upside, basically looking at price action, the way they were lifting the offer, everything. And I thought, I'm going to bracket this, and I'm going to get in at 33 on a breakout. I really felt it was going to pop. Okay, I don't, breakouts a lot of times will go up and come back. But I thought, well, it may retrace down here, and I'm going to get in on a limit at 30.75. So I bracketed the market. Now the worst thing happened. Okay, it broke out and came back, and that's not even the worst of it yet. Okay, I had this last week's high was at 60 or 27.25, and this was, I would chalk this up to a bit of game playing. It flushed everybody out here, just flushed it down in G down here. Now at the time, I'm looking at these trend lines and everything. Like I told you, this trade, I could have just gotten out. I had some references to use. Okay, I could keep, I could decide that the trade is broken when it got below the moving averages, which it really didn't. Now I don't count this little dip below by 1 or 2 ticks as a point of ruin. Okay, it tested it. You can see it tested it here and to right here. Then it kind of looked through it a bit. That doesn't bother me. I also at this point had, after I'd already been ticked in at 32.75, I had drawn a Fibonacci. I knew it could, well, it's like, wow, well, maybe this is the 1-2. Maybe it needs to come to 61.8 or 78.6, Then I'd like, well, I'm going to readjust here, these trend lines, and I decided that I've got the possibility of it coming all the way down to this one that's lower right here. I'm sorry, I said I readjusted it. I added this one later as we scroll forward, okay? But I thought, well, this it could come all the way down to this trend line. Now this is a lot more heat than I normally like to take, and now I've been, and I even joked about it in the room. The worst thing I think I did. I remember thinking the worst thing I wanted to see happen was it go up and then come down and fill me, because I really realized even if it did, I might stay in for that 30.75, and I did. I stayed in, but I did not. I should have. By the way, I should have expected it, and here's why. The way this average is coming up, this is a pattern that I see very often. This average, the 20, I'm only going to deal with the 20. I'm not going to talk about the purple one. Okay, the 20. Let me throw a 50 on there. I don't know if I had that on there or not. I think I did. I did. I had the 50 on there too. Okay. All right. So the way these are leveled off, and then you have a faster one coming up, 45 degrees or more, it will sorry, not always. That's not what I was going to say. I was going to say often. It will often reflect itself in price action as like it kind of bogs down a bit, or it pulls it back a bit. It's almost like it's weighted down until this breaks free. Okay, and that's sort of what happened, and it came down, and I'm seeing this more because now I'm engaged. All right, I'm in the market, and my physiological being is activated. My mind, of course, sharpens, and I start seeing things a little more clearly than I did because I wasn't paying attention. And I came in cold. I think I went and got something to eat upstairs or something. I don't remember. All I know is I do remember sitting down, and then I do remember seeing this, and because sometimes you walk away and come back, see opportunities more clearly. Boom, there you go. I was not in pace, and don't forget, you know, these are 30-minute bars, these are 5-minute bars, but sometimes 5 minutes seems like a long time. This is a long time. I got in on this bar 12:20, and it took just 15 minutes, 20 minutes. I think I was in this trade an hour. But then this happened, and this, once I saw this compression though, okay, this is called compression, if you're not aware of it. This was coming, this yellow line was coming through here. I thought, well, I got a good shot. It's going to break to the upside, not because of this, but this is a reflection of the dynamics, but because of this and because of the pre-market analysis, all this stuff. I thought, but man, it's coming back. Maybe it'll go to the 61.8. Maybe it'll come down to there, and it did. And then when it did, I drew another trend line. Okay, but it hadn't touched my other trend line yet, and I thought I need to be below that because it actually could touch that and give me a little throwover. Because one thing happens in the ES is there's game playing, and somehow they know what everyone else is doing, the ones who have the power to push it around. I mean, maybe it's like a Borg, it doesn't really have a brain. It does that, but sure enough, the market finds a way many times to flush them out. And I had to take some heat, a lot more than I normally do. I mean, I know traders that routinely take 4 points, 5 points, even 10 points where they put their stop. That doesn't mean they wait till they get hit to get out, but they're willing to do that. They can do that. They have the accounts to do that. That's great. Me, I don't like to do that. I don't like to risk. I really like to risk only like anywhere between 4 and 8 ticks, but I'll make an adjustment, and that's, you got to be really right and really on time to not get just shaken out all the time when you use tight stops like that. But that's where timing comes in, and structure and all that kind of stuff. I typically don't use 4 ticks, but a little more than that. But I certainly don't initially go in at 4 points or anything like that. But I have had a great couple of weeks, great day before this day, and I thought, well, you know what? I really believe in this trade yet. I don't think it's reached a point of ruin. I don't believe it's broken, and I just, I got in at a bad place. I averaged down, which is not. I don't think that's a 100% always bad. Um, I knew it could unfold a couple ways. It could break and go. It could come down and get me at 30.75 and then go, and then I'd pick this one up. But I didn't want to miss it if it broke, and then I didn't have to take the 30.75, but I also felt like, well, that'll, averaging down at this point could actually offset the fact this one was losing now. So, a lot of mental calculations going on here, and to think that you have to have it all right as soon as you place the trade, and then you don't touch it, you just let it work. I was taught that, but I don't believe that's correct. I think it's just like flying, just like acrobatics, just like anything that is fluid, and the dynamics that change, you need to adjust, and it has to do with the risk tolerance and all those kind of things. All right, so now that I've completely kind of gone off on a tangent on this, let me get back to how this played out. So came down here, tag 61.8. And I don't know, like I've said yesterday in the video, I'm not an Elliott wave expert, but like this is maybe a 1-2-1-2. Maybe the 1-2 didn't start till here. And this was just a corrective wave that finished and terminated, and boom, there, this was the start of a new impulse wave. I don't know, it doesn't matter. But anyway, after that, you can see what happened. We had the break of these moving averages, which is nice, and that kind of helped me stay in as far as well, not stay in. It helps me. I can read them. All right, if you can read them, and it helps you know what's going on, then great. But I also knew it over here. I mean, look what H have. H, G, when it came down here, and this line right here is prior week's high. I wasn't thinking it was going to flush down here again, and if that was the case, I would have had a limit at 27.75 or something. That would have been beautiful. I would have looked like some kind of master trader. Maybe someday, right? But anyway, I was watching the price action too, and how hard it struggled to get down here at points or stay down here. It just kept getting pushed back, snap back, and I even had people telling me, "Oh, just take a loss," and that was not bad advice, because it could have gone to the basement. I don't know, but I've got to trust my own judgment sometimes, and well, I need to trust it all the time, but sometimes I have to um, have faith in my own judgment is what I'm saying, and realize that you know um, I I can see what's going on too. So here, let me erase this stuff. All right, so it's coming up, and then once H opened, and I just knew even before it broke the F high and everything. I just knew, and I stayed in, and it started gaining some traction. Blah blah blah. In fact, my initial target, I thought I was going to take off one at like 36, and at that point, after I saw how it struggled, everything that happened, I said, no, I'm going to go at least till I earned it. At this point, I've been in there suffering, because I was not pleasant to stay in a trade that long. It's draining, and or can be draining, and constantly thinking I'm wrong, but then other parts of you are saying, no, I've got this. It's all right. Then you have other people saying, oh, you're wrong. Just take the loss, and they mean well, and they could have been right. But in this case, I had to choose. And I chose no. I believe this trade's not broken, and so I put in a limit right up here at 38.75, just under these POCs, and got it. So I got 6 points on the one and 8 points on the other, I think is what it was, and you can see it kept on going, and I had 2 more longs after that. I had a pretty stellar day yesterday, and that's my trade review on that. What's the takeaway? I'll tell you what it was for me. I need to stick with the plan. I'm going to do my trade plan in a few minutes here. Again, I was hoping to get it done even earlier, but my analysis was to watch, let it shake out, which kind of worked against me a bit because I've been in the habit of trading early and being done by the time I took this first trade yesterday. And then the other thing was to really watch for how it develops in this little cave right here, or a little pocket, whatever you want to call it. And with sort of an inclination that I don't think this short covering rally, which is what I feel it is done. We had this up here to kind of come back and visit. It was beckoning, and man, after all the effort and the little results that they seem to get after trying to push it down, it's like it's building up compression, and then finally, the tire popped. There it goes. That's how I kind of feel it, and I feel it. For me, trading is there's some, you call it quantum mechanics going on. I feel it. I can feel it building. Anyway, that's my trade review. Hope you enjoyed it. Hope you got something out of it. Oh, one other thing I want to share with you. I also, at one point, I didn't use this to stay, or not even to stay in. I used this, it basically caused me to relax. Well, I guess it maybe helped me stay in. I wasn't planning to get out, but basically, I think I drew it from here. One moment, let me stop here. I want this pitchfork thing. I'm sure if you on your software you've got a pitchfork, and the way I'd previously been learned how to use it was not correct. Okay, this is not, if I can, okay, there we go. All right, now I could draw it from this high. I could even maybe draw it from this high. Isn't going to change much. The bottom line is when this started retracing, could not get to the median line. I felt very confident that we would come through here. In fact, this break right here would have been a place to enter. But that's another thing, another tool. All right, there we go. That's my trade review. Hope you enjoyed it. That was worth on 2 lots around $700.